Some of this trade has definitely been the hope of fewer regulations, the hope of some tax reform, which really means tax cuts with this administration and this GOP. So, you know, it could, but as long as that hope is out there, it might not.
I think probably as long as that hope is out there, that right now it is putting somewhat of a floor under markets and specific sectors in general. I really do think that. I think that it's just a dubious notion to take credit for, because then when the market goes down, and eventually it will go down, and history tells us that more likely than not, just given by how long bull markets generally run, it's very likely that that downturn could happen during his presidency. Then what? Will he take credit for it on the downside as well? But to the point, let's look at what's happening here in terms of expectations for the market. Let's see if Trump is going to be right. Firstly, I want to jump into the terminal because we're looking at the strategist estimate that we compile here. This is a very simple analysis. The white line is our average strategist forecast, about 22 people we survey. You can see that it recently ticked right above where the S&P 500 currently trades. That's in the blue. The issue with that is that there's a spread here is getting pretty narrow, and analysts right now, I think, are trying to catch up to the market rally that we've had, because they basically, for a while, you can actually see the estimate throughout this entire period here. Here's the spread between the two, was below where the S&P 500 was. That normally doesn't really happen.
Which is unusual, right? I mean, strategists usually overhype, or at least they're maybe overly optimistic. That's a better way to put it.
Roughly 80% of the time, according to our estimates since we've been doing this, strategists do call for gains in the market. So if the strategist is right, the market's going to go up and Trump might feel good. However, this brings us to the downside scenario, and this is the other part of the terminal I want to dive into here. This is the SEAG function, and I've done it for the VIX. I'm going to click over here to heat map. This is such a cool function. It's a new one that we've been using, and it's really useful. I'm going to set the period to 20 years, and essentially what this is showing us is the degree to which the VIX moved in any given month over the past 20 years. Let's look at August here, because August is when it gets problematic. Here's your column for August. Right here, this is basically looking at the average move in the VIX during this month. It's a 12% bump. It's the biggest one out of all the months. Typically, this is not a great month for stocks.